Good morning, everyone, and welcome to the European crossover webinar. And we just got some data that came in here with Italian industrial output down minus 5.6 and a half, 5.6%. They were expecting down 2%. We actually had data hit even earlier. We had French unemployment rate. That was very early on. And then UK unemployment or employment numbers, employment change here. They were expecting minus 148K, they got minus 164K. And of course, this Italian industrial output data we just received. As we roll into the day, we are at the top of the next hour, or this hour coming up. We will get German zoo number. They are expecting 41.7. The prior had been 56.1, so they are expecting a dip. Obviously, with the coronavirus, things have really gotten on fire, so to speak, and really got things going. And obviously, it certainly apparently impacted those zoo numbers. Then we come to the States, we will get JOLTS job openings. Now, that won't be until 10 a.m. Eastern. Do get the smaller NFIB number, optimism number, but we'll get JOLTS jobs openings at 10 a.m. Eastern. That's going to be the only significant piece of data here in the States. Let's go and take a look here at the euro dollar. And obviously, yesterday was a big day. Boy, we really sell off. And you can see it was quite the turnaround. We had a bearish engulfing bar. I mean, engulfs the entire candle, which is what I look at. Some people try and do the entire with the wicks. That's not important. What's key really is it's the body. And that was a full bearish engulfing bar here. We're up a little bit steadier. Obviously, big moves that we saw here, as you can see here, in Apple. Pretty good pull down. Microsoft, Amazon, they're over here on their lower ends. And we'll go and take a look at what we got with equities. And good morning, Irina. And boy, did we get a slide. Go back to this. Here we are. You're seeing on the NASDAQ. And we just about made it right here to the 50%. I actually took a long, like a minor long. Actually, it was right before there. And then we took a dip. I think it was, I don't remember exactly what it was. I guess it must have been along this line and we saw a bit of a pop, but then I looked at it and I said, it looks like we're going to head down. And actually I had some support here. I think it's on the 30-minute at 80, 684. And look, the low was 681. And we didn't make it quite down to the 675, which would be the 50%, but you can see we've had a nice rebound. Actually made it all the way up to here to 854 before the market has turned around and slid right back down. You can see here on the 2-hour chart, you can see here, this is a demand area right here. So any dips back down here, if you're short, you would want to be careful because look, you've got a lot of demand in here. So any dips back in here should find some buyers. Maybe we take another dip, but you can see here we made it all the way back up here. That was a pretty good run back. Think about it. Up here to 871 before we turn around and slid back. We are currently right now below same day VWAP. We'll take a look at the S&P. Here it is on the 2-hour chart. Actually, the move has had a pretty good move. It looks quite comparable to the NASDAQ, but I think the NASDAQ, well, I guess they're about the same. But the NASDAQ might be a little bit deeper, but they're basically the same. But quite a bit of a pull off or yank down. And you can see in this 30-minute, the market moved right back to the slower exponential moving average before pairing back. And you can see here we've got some support here at this 11,176 or 11,1776, which where we're at right now. So not sure if we can break too much further from here. We'll go on and let's take a look also at gold market. And boy, did we see a snapback. Boy, that thing, and even I think we touched on this the other day. I don't know if it was, maybe it was Monday, maybe it was yesterday or Friday. But I was like, okay, it's higher, but it's not like it's crazy or anything like that. I mean, it wasn't anything that really stood out. I think we just looked at it, but okay, well, and I think it might have been yesterday because I think I said, okay, well, it's moving higher, but it wasn't like anything crazy. But boy, once they started to turn things around, equities, boy, did we take one heck of a sell off in here. Crude oil at 40.60. Actually, might already time to roll into January. Just about. We'll go on and take a look at the news. And the Australian dollar dips and traders cautiously welcome vaccine news. The Australian dollar traded slightly lower against its U.S. counterpart on Tuesday, while New Zealand dollar was marginally higher as traders weighed the news and progress in the development of a coronavirus vaccine. The Aussie was traded at 72.77. On Tuesday, Sydney time having held its highest level in 2 months in late intraday trading on Monday at 73.40 after Pfizer said its experimental vaccine was more than 90% effective in preventing COVID. Perhaps the market did overreact to the vaccine, given there's all some way to go to prove that it's safe, said Westpac analyst Emery Spitzer. What they've shown, though, is reasonably effective, and safety is another stage. Once the market locked into the finer prints of these results, maybe they backed off the trade a bit. The New Zealand dollar was at 68.30 on Tuesday, which was also lower than the intraday high of 68.54 on Monday, when traders reacted to Joe Biden's clinching of the U.S. presidency over the weekend and the vaccine news. The Antipodean currencies had weakened in recent weeks as their central banks signaled further monetary policy easing to rescue their economies from the coronavirus crisis. The RBA this month cut and vowed to maintain its cash rate and 10 basis points and shifted to quantitative easing, while its counterpart in New Zealand is expected to announce cheap funding policy and cut rates below zero next year. Australian yields had been falling after the RBA bond buy announcement, but bonds were tracking the direction of the U.S. rates, which were sold off following the Pfizer's findings. On Tuesday, 10-year Australian bond yields were 13 basis points higher, while 3-year bonds were half a tick higher. The mirroring dynamic was likely to continue, while the trajectory of yields in the near term was uncertain, analysts said. Control of the U.S. Senate won't be known until January, and rolling out the effective vaccine to enough people is unlikely to be quick enough to prevent further reactions to any activity and movements. It seems likely that more stimulus, monetary and fiscal, is likely to come with COVID cases reaching new highs in the U.S. It's hard to see the services sector growing strongly in the near term, Australian New Zealand banking group strategist said. Yen claws back some ground lost on COVID vaccine news. The yen recouped some losses against the U.S. dollar on Tuesday after the safe currency took a drubbing on news of the development of the coronavirus vaccine, which raised optimism of a global economic recovery. In the afternoon Asian trade, the yen firmed to 104.97 against the dollar. Against the Aussie, it was at 76.43. What's more important about the overnight movement is that it's overturned the current trend of the U.S. dollar falling instead of the yen when the market turned risk on, said Masafumi Yamamoto. The yuan and the euro have been rising against the dollar, and equities jumped on the Biden's election wing, but the overnight movement flipped things back to the way it was when the markets usually turn risk on, treasury yields rise and depreciate more than the dollar. The vaccine news came globally. Indeed, many questions about the vaccine and its effectiveness is by ethnicity, age, and how long immunity lasts. What they've shown is that it's reasonably effective, and safety is another stage, and nothing else. So with that, we'll go and move into the analysis. Irina said thoughts about S&Ps. Well, the S&P is somewhat mirroring what the NASDAQ did. And I'm going to take a look at it from right here, which is on the 2-hour chart. We've already had a pretty good dip here, and although the NASDAQ, let's take a look at the so we just about made it here to the 38%, which is going to be 3,500, but we're well off that right now. I mean, we're off the lows. Resistance is going to come in right there. That's 35.61. So we're not that far away. And actually, we've already made a run there. Look at that. The high was 35.58. So 35.61 here. And really, I think while we've kind of turned things around in this short term, any movement back, they're going to go on and fade that or look to sell into it. So if you looked at what would be the bias chart resistance on the way up, 35.71 would be the 38%. With 35.89 to 50. But I think you'll see pushback if they get up to 35.71 around that area. And ahead of that, there's actually 35.65. Here's a 30-minute. That's that previous high there. And see right there, 35.65. So my guess is that they'll probably want to make a move and get just above 65. That'll goose some stops, and then maybe we kind of flatten out a bit from there. But that would make an area for them just to go on and level for them to go on and try and take out some stops there. And let's just go on and move into the euro then. Okay, so the euro posted a bearish engulfing bar on Monday as equities began to reverse earlier gains. Immediate support will be 1779 with resistance at 1863. So just like with the S&P, on any moves or return moves back up here, I think they'll go on and look to go on and fade that, at least in the short term. We'll see whether or not eventually it regains its footing, but that's pretty bearish technical picture right there, engulfing the entire prior body. So even if you were bullish, you would look for this market to dip back to find some additional, to do some testing. Potentially, we can go on and test down to here for starters. That wick right there, 1770. But we said for right now, our immediate support is going to be 1779 with resistance at 1863. And on to the cable. So the cable closed slightly higher in a tight range, closing just above 31.51. You can see that right here. Resistance for Tuesday will be 31.95. We're actually above the 31.95 now, with support at 30.81. I had drawn this sometime last week, and you can see the confluence here. So that's actually has the potential right now to get to 32.48, and actually even a little bit further than that if you're going with this parallel trend line. So let's go and put it right there. Let's call that 32.55. See if they goose the stops there. So 32.55 on the upside. And for support, it's going to be this 31.51. Looks like they're running away from that level. On to the Aussie dollar. So the Aussie tag weekly level, or I should say daily level, 73.33. Before paring back with the reversal in equities, resistance for Tuesday will be 73.30 with support at 72.42. Onto the Kiwi. This pair just remains solid. So the Aussie closed at new highs, staying above 68 cents. Resistance will be 68.96. Now, previously, remember coming into Monday, we were looking at 68.27, but we closed real solid here, so we're giving it that next level, which was up to 68.96. So it's still a ways away, but that's the next key resistance with support at 67.40. Okay, we're just seeing a little bit of a dip here in the NASDAQ. It's not new lows, but dip here. Now to the dollar CAD. So the dollar CAD blue stops below 130 before forming a hammer on the close. Support on Tuesday will be 29.62 with resistance at 30.63. And on to the dollar peso. The dollar peso challenged the 20 cents area before responding to close above 2025. Resistance will be 2046 with support at 2023. Remember, the 2023 was that target we had from the prior week, so we'll keep the 2023. The resistance is going to be 2046. And we'll move on to the dollar yen. And Nikkei, I meant the NASDAQ is still sliding here. On the dollar yen rebounded on Monday with a force on up to 563. Resistance on Tuesday will be 573 with support at 487. And it looks like we just waited down there. We got to, looks like 41. So it's 487. So the dollar index posted a bullish engulfing bar, opening the door for a recovery rally. Resistance on Tuesday will be 93.07 with support at 92.56. $93.07. And with that, we'll move into the cross rates. I do see here in the pre-market hours, you can see Apple took a dip here, Microsoft another dip. So that's what got things moving. And we're actually down at 11,714 now. You can see here NVIDIA weaker here. Tesla's a bit weaker. But that push you can see here with Apple, with Microsoft. Now, Microsoft is at resistance support 216, but you can see the pressure also coming here at Amazon. So you can see a pretty good run here with the QEN. Pretty good solid move here. And resistance be right there at that bar. Should be 72.41. Immediately we see 72 cents, but above that there's a potential to get to 72.41. We can go with this lower wick too, which would give us 72.33. We'll go with that 72.33 on resistance. Boy, what a turnaround that was. with support here at 71.40. Onto the euro pound. So we're finally pressing on the low side here. And support's just going to be the prior day's low right there. Not prior day, but this most recent low. And yeah, that's perfect right there. Which going to be 89.42. Let's go right there with that low right there. You see the low here? That's 89.36. So that'll be support. And resistance. That's where the stops were tripped at 89.68. We'll just put it just right there, the body right there, 89.73. If we stay below, then we can switch that to bearish. And let's go and move into the euro odd. Going to remain weak here. We did push the stops here and kind of hold below those lows. For now, it's just going to be right these two wicks here, which is just below those lows. I don't think it's going to get down there, but which is 162 even. And resistance is going to be that body right there, which is 62.63. Onto the Euro Kiwi. Seeing a pretty good follow through on this downside move. Right there for support. 72.81. And on the upside, right there, that wick, 73.67. And going into the ASEAN. And we did go and see this little bit of a breakout here. The resistance, we almost tagged up here towards the 77.10, which is huge. That's actually going to be a resistance. I don't think we're going to get there, but that would be resistance if we take another step on there. So it'll be 77.10. And support would be this wick here. 76.16. to the guppy. Boy, have we really taken off with this yen weakening. Holy smokes. This is a key level right here, which is 38.99 or 39.09. We'll just go with 39.20. I don't even think it could even make it to 39.25. So let's go with 39.20. And support these wicks coming right across there. This is going to be 38.53. And lastly, with the sterling odd, we have established a nice little wick, and the resistance, you're looking at it coming forward. It's going to be 81.60. And support right there across, just below those lows, and that's going to be at 80.56. And you can see here with Facebook, same thing, pushing the lows here. Microsoft's into support, but same thing, another extended low. Apple off the lows, but we've made another move lower. You're seeing the same thing here with Amazon, and that's where the weakness. Now we're kind of holding here with these lower lows here in the NASDAQ, but we've taken that dip. But with that, we'll go on and get the bias chart posted, and we'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.